Where's my fingers? Let's go that one. Indexes. Oh man, look at that, up and up and up. Everybody's so happy because no one's going to have to pay taxes ever again, and it doesn't matter because, you know, what are taxes for anyway? Obviously, according to the Republicans, there's no point to taxes. It's just some annoyance that they have for some reason. Let's see. Or as Leona Helmsley used to say, only poor people pay taxes. So this is going back to, God knows when, this is weekly, 2016, 2015. So here's where we've come from 2015, and we came from 15,000. We're now at 21,000. So we're up 6,000. And look how the Dow's moving in $3,000 chunks. 3,000 consolidate, and another 3,000. So interestingly, I think you can expect this kind of year, because that's what we did back in 2015. We had 3,000 consolidate on the 3,000 line, and then move up. So if we're going to, even if we're going to go move up, we'll probably still consolidate on the 21,000 line. S&P also. S&P went from 1,800. You know, it's interesting. The S&P, Dow 18,000, S&P 1,800. Dow, I'm sorry, 1,500. Sorry, 1,500. So the S&P started at 1,800, went to 2,100. So same 300 move except 110. Oh, I knew there was something I didn't do. I didn't mute you people. I hear chatter. Shame on you.
You are now muted.
There we go. All right. No sound. Uh-oh. No sound. Have it now. Some sound, maybe sound. Okay. Where were we? Oh, yeah. So the S&P, interestingly, moves like 1/10 of what the Dow moves generally. Now, that means the S&P, though, going from 18 to 21, then 21 to 24, same three, you know, in this case, 300-point moves. Here you have 3,000-point moves, but they're still the same basic move and the same basic consolidation off the line. So I think we can expect that to be consistent. Now, NASDAQ is weird. The NASDAQ has made an exponential move. The NASDAQ went from 4,000 to 4,500. Then it went, well, but really it was 4,400, you know, kind of hit 45 but pulled back. So the NASDAQ went up 10%. Then it goes up another 10% to 4,800. Now, though, it's gone flying past. It says screw 10%, and it's gone from 4,800 to 5,500 on this one. This is the other NASDAQ. The Russell went from 1,000. This is easy. Went from 1,000 to basically, it's hard to say what you call that, but I call it 1,150. That's 150 points, and 1,152, 1,300, and now 1,300. So we figure 1,450 is going to be a good line for the Russell. But I still think the rest of the year is going to look a lot like this. They all did the same thing after making this kind of move. They might have gone up a little bit over, but they all ended up making the same basic move. The Nikkei is its own animal because obviously nobody's manipulating the market more than Japan. Now, Europe, on the other hand, they did nothing. While we were making our move, they were doing nothing, which was why probably, you know, we don't play Europe, but it would have been a good idea to jump in on this bandwagon back here because we had gone up significantly. We had made a 10% gain, and they were laying there. You know, but of course, with all the Brexit and bullshit, nobody even knew if the EU was still going to exist, so that was a problem. I mean, Europe still exists, so, and the company still exists, so I guess we could use that logic. They went from 26 to 30, or from 2,600 to 3,000. That's a 400-point move. Now they go from 3,000 to 3,400, another 400-point move, but they've busted over theirs. But they're still playing catch-up to us because that's two 10% moves, one 10% move, two 10% moves. So, you know, they're not like behind us. I mean, sorry, they're not like ahead of us. So we are catching up to them. They're catching up to us. In fact, probably we can do a bigger picture of the DAX and you'll see of the euro or the DAX, and we'll see that. And the DAX also went from, I don't know what you call the DAX. We used to say DAX 10,000 was the line. So I'd say 10,000, then 11,000, now over 12,000. So again, and obviously that's 10%, 10,000, 11,000, 12,000 is a 10% move. Let's take a look at the euro monthly. Well, even here you get a longer term view. So they're more more than double. Everybody's more than double. It's amazing. And they haven't more than doubled their profits. That's what's scary about this whole rally, though. It's really a multiple rally. It's not a real rally. And Euro stocks was here before. They topped out here and then collapsed. And I'm sure the DAX is in the same position. DAX was here before, and then they fell apart. So it'll be interesting to watch what happens with DAX and the Euro stocks, because they've got the same economy as we do, basically. But what they don't have is the BS, like the tax cuts and the Trump crap that we have. So it'll be interesting to see how they perform in the same situation. Now, logically, if our corporations are going to go up and up and up because of tax cuts, right, shouldn't their corporations be at a tremendous disadvantage? And shouldn't they be going down on the same news that we're going up on? Because they do compete. So Airbus competes with Boeing, for example. Okay, so Airbus makes money and has to pay 30% tax or whatever they pay. Like they pay their European tax. Boeing only has to pay 15% tax. That means Boeing has 15% more money than Airbus to do R&D and all kinds of stuff. No, sorry, it's not 15% more. I apologize. Boeing has 100% more money. Because what's the money? It's the profit, right? The money that flows through your business, it doesn't change. That's no change for anybody. But the money that you have, the discretionary income you have to reinvest, to buy other companies, to build more manufacturing facilities, so on and so forth, Boeing will leap ahead of Airbus doing that. And that goes for the American car companies versus the European car companies. So there's a lot of negatives in this tax plan. So then the question is, what's Europe going to do? Are we going to have a tax war? Are they going to go to 15%? And then Trump, see, this is what's going to happen. They'll go to 15%. Then Trump will have an emergency thing, and he'll say, oh, those Europeans go to 15% to try to steal our jobs, and now we're going to go to 5%. By the time we're done, we'll be paying corporations to do business. We'll pay them to do business in our country. The Freedom Caucus is now supporting the amended Trump Care bill. That's what the news was just before we started this thing. That is not good, folks. That's another disaster. Oh, there you go. That's exactly what Leanne was talking about, right? Only poor people pay taxes. It's like, screw these people. I picked up a medicine for my daughter last week, and because she was allergic to one, she was allergic to the generic, so we had to get a different one. They had a $150 copay on the medicine. I said, $150? I'm like, how much is this stuff? And the lady at Walgreens goes, it's you pay $150 and your insurance company pays $2,200 for medicine. So like some medicine for basically it was like a bronchitis. It's like, what are they, insane? Obviously there's no possible way the production of that thing is anything like that kind of money. And it's something that millions of people use. It's just crazy what they charge for these things. It's completely out of control. And I looked it up, and if I got it in Europe, in Europe it's free. But in Europe, the pharmacy, they only charge $150. If I get it in Cuba, it's $75 in Cuba. I can just fly. So for the money me and the insurance company paid, for the $2,400 me and the insurance company paid, I could have flown to Cuba, stayed in a nice hotel, had a nice weekend, picked up the medicine, and come home. And I still would have saved like $1,000. So, it is the craziest freaking thing. Healthcare is completely out of control. It's got no basis in reality. I don't know. I don't know if it's fixable. Our country spends 15% of its GDP. That's getting towards $3 trillion on health care for 300 million people. It's double what anyone else spends in the world, double what any other country spends, 4 times some countries. Other countries pay a quarter of what we pay, and that's the universal health care. We don't even have universal health care. We pay double what the second highest paying countries pay. 15% of our GDP goes to health care, and it's all just gouging. It is a really sick system. Anyhow, so this taking away Obamacare is going to lead to a complete disaster. Anyway, all right. So that's my complaint of the day. Not counting the article I read this morning. All right, let's see what's happening. All right, video and sound are working as they should be. Please check both the settings. Okay, yeah. And she needs to reboot. People need to reboot. I can't. So if I reboot, I screw up the entire recording. That's something we learned last week. So we're going to try to avoid that. But if everybody can't hear me, then I got to reboot, which does not happen often. Diageo says, Fed raised rates in March, but the yield on the 10 years moved lower since about 2.6 to a close. Well, because they're looking at what they think the rates are going to be over a 10-year period. They're looking, so in other words, somebody who's forecasting a 10-year is forecasting the rates not for this year, not for now, but they're saying what's going to happen over the next 10 years. And pretty much there's almost nobody in the forecasting world who doesn't think that at some point we're going to have another crash. And if we have another crash, then the Fed's going to go, then the rates will go to zero again. So, while the Fed may be, and even the Fed, when you read their statement, they're saying we need to have some dry powder so that when the economy has problems, we can do something. Because at zero, they really can't do anything. When the rate's at zero, they have to pay you to borrow. The next step is they have to pay you money to borrow money. So in other words, they'd be so desperate for someone to take some money out of the bank that they have to give you some money to do that. That's what negative rates really are. Although technically, obviously, the main purpose of it is they give a negative rate to the depositor, so you have to then pay money to keep your money in the bank. Even though, and here's where Bitcoin comes in, even though the bank doesn't actually keep any money, nor do they have any money in the bank, they have some bills for cash, but, realistically, compared to how much money they actually have on deposit, they've got no actual cash. Money is an electronic fantasy. And paying the bank to hold your fantasy money is ridiculous. The old concept of having a bank was because your big bills, you didn't want to carry around, or you didn't want to leave $50,000, $100,000 of cash bills in your house because someone could come in and steal it, and there was no way to identify it, so that would be bad. So now we have the bank as the custodian of our digital transferred currency. All right? But this is the deal with Bitcoin. And by the way, on our cryptocurrency page, let's do a commercial. On our cryptocurrency page, we're all going to buy some, it's not a demand. For fun, that we expect to lose money, just to be very clear about this. We don't expect to really make money. That would be funny if we do. But we are all going in with this green coin project. And the green coin is interesting, and Chris wrote up a whole thing about it. Inside Scoop, Chart School, OpTrade, digital currencies. Here you go. So you see BDC's Crypto Corner. This is not a good title, BDC, but we'll talk about that later. He has a step-by-step instruction here in BDC's Crypto Corner, which should be called the Green Coin Project instead. And he's telling the members, because we talked about this, we're all going to do it, and we're going to see what happens if we all jump into this coin, which Chris is involved in. He's the one who helped fund this thing, who started. And PSW Investments is buying some, and everybody's buying some. And we're going to consider ways to figure out how to turn it into right now it's a very tiny coin. But if we trade it around and if we find things to do with it, we can turn it into like a more popular coin, and maybe it will become a lot more valuable. But anyway, so just the commercial is just to say, here's BDC's Crypto Corner, and if anybody feels like completely having a fun project and learning about cryptocurrencies, we're going to start doing this. So we're all going to have it, and I'll do it. In fact, I'm going to go through it myself. I haven't done it yet, and I'm going to go through it myself, and we're going to get some, and we're going to follow it every week on the webinar. We'll learn more about cryptocurrency because, as I was just saying, because money is bullshit. Okay, because money is bullshit, and as this is why it's becoming very popular in China and Japan and things like that. These cryptocurrencies are no different they're better, frankly, than regular money, because regular money is still a transfer of invisible funds, like electronic funds that go from your boss to you to the bank, and then from the bank to whoever you write a check to, and so on and so forth, right? But you're just transferring these funds, and the bank is sort of like the calculator to help to keep track of it. That's not a real service. It doesn't cost them any money. I mean, nobody at the bank actually does this. It's just all done by computers. Now, the difference is if you have a digital currency, you do the same thing, except the bank per se is a open source system, and your currency is extremely well marked and tracked in your name. So nobody can really steal your money. It's very hard for someone to steal your cryptocurrencies if they're well made. Not all of them are. So it's an interesting thing, and it's becoming popular. And the biggest danger to it, though, is that the governments don't like it because it disenfranchises them from being in the money game. But anyway, so back to the original question, just a big sidebar. But back to the original question, though. So the Fed is raising rates, but they're only raising rates so that they are able to lower them later. They said that. They said, well, we can't lower rates anymore. We have to raise them so that we can lower them if anything happens. They already think something's going to happen. And, look, real estate is bubbly. The market is clearly bubbly. I mentioned yesterday. Was it yesterday? Anyway, all right, well, whether it was yesterday or not. Yeah, it was yesterday because it was Monday. No, it wasn't yesterday, Wednesday. Maybe it was Monday. The market valuation is ridiculous. The market has gone up $1.7 trillion, I believe was the number, in valuation. Let me take a look. Yeah, here it is. All right, so it's Monday. So we talked about that. Oh, maybe it was yesterday. Economic data, euro, blah, blah, blah. Nope. Sorry about that. Oh, yeah. Because markets go through the roof. Okay, that makes sense. Yeah, it was 1.7 trillion. Okay. So, I'm sorry. It's hard for me to say something when I'm not sure if it's the right number or not, because then everything I say after that becomes, worthless. So the NASDAQ has gained $1.7 trillion in market cap since the election. That's 20%. It was, whatever it was, and now it's 1.7 trillion higher. It's at 8.5 trillion at the moment. So, but only 200 billion of net inflows have come in. All right? And that means that $1.5 trillion of the gain is speculative. And by speculative, I want you to understand what I mean. If I buy Apple, let's take Apple for an example. Apple is a $600 billion company-ish, probably 700 by now. 750 billion, $750 billion company. All right. The numbers are going to get a little wacky. All right, let's do this. Tell me if this is losing everybody, but Apple's a $750 billion company. Let's say it was $75 a share. Forget that. It's obviously it's double 75. But it's easier to just say, let's pretend it's $75 a share, and $75 a share is $750 billion. Okay? So money goes in and out every day. Volume, 25 million. So every day, 25 million. Okay, so 25 million times 75, $1.8 billion. All right, and the real number would be double that. Would be 3.6. So every day. Sorry to flip back and forth. Every day, the reality is $3.6 billion of Apple stock is traded. Okay, that is 1/50th. It's 755 divided by 3.6. No, 1/200. Okay. So a 0.5%. So every day, 0.5% of Apple stock is traded. And it's hard to say. It's not about how many shares of Apple there are. It's about how much dollar volume is traded. So a 0.5% of Apple stock is traded on any given day. That means any move. Okay, even if it was 100% positive, 100%, even if every single trade was a buy at the price, even then, any move that was bigger than a 0.5% would be unrealistic, right? Because you can't add more by pushing money into the Apple stock. You can't add more than a 0.5% by trading a 0.5%. So if it was 100% positive, it could only add a 0.5% in the day. The reality, though, is some people are buying and some people are selling. So you have a net money flow at the end of the day. So of the 1.8 billion that in our example that we're using that flows in, maybe 10% of it, one way or the other, is going to influence the move of the stock. And really, when it comes down to it, the bell closes at a certain time. The bell rings and the market closes. Let's see the 5-day chart and take a look. All right. So here's a good example on Friday. On Friday at 3:20 p.m., Apple was at 141. At 3:45, Apple is at 142. Then all of a sudden, at the close, Apple goes up to 144. That's $2. $2 in Apple. Well, remember, if we use our example, a $2 move in Apple would be a 75 is 750 billion. Would be $20 billion. There you go. Okay, so a $2 move in Apple would be $20 billion. Now, it's not a lot of volume. This is just a kick-in volume right at the close. Adds $20 billion in market cap. Now, in reality, at the bell, the last trade is the one that counts. The very last trade at 3:59 and 59.999 seconds, whatever trade that is, that's the one that counts. So even if nobody else bought it, if you just jack up the price right at the close, and this is what they do, that's what this is. You add 2 points to Apple. Not only that made a tremendous influence on the NASDAQ, right? So adding 2 points to Apple moved the whole NASDAQ. It's almost over a 1% move. It's like a 1.5% move in Apple. So right at the end of the day, you're adding 1.5% to a stock that's almost 20% of the NASDAQ. So you're adding 0.3% to the NASDAQ's entire day just by jamming Apple up $2 into the close. That's how the whole market is working. So, when I talk about these things, I'm talking about money flow and whatever. That's what I'm saying. Only this teeny tiny percentage of the market, $200 billion of net money flows, made the market go up $1.7 trillion. So, like, you're getting an 8 times return on the money flow. Because Because what's the reality? If you buy if I buy 1,000 shares of Apple at the close for $144, I'm spending $144,000, but I've moved Apple $20 billion higher. But then it's a matter, now obviously if it's a completely bullshit move, it'll get reversed pretty quickly, and I'll lose my $2, right? But if people buy into it, if I do it right, and if I do it on a Friday, and I have my analysts come out over the weekend, if I have my friends who are analysts come out over the weekend and talk about Apple's great move and the resurgence, and they come up with a bullshit story to explain why it went up like this and whatever, then by Monday morning, more suckers are coming in to buy. And then that proves it to the TA people that this move was real, and they start buying because they think it's breaking out. And that's how it works. And then Trump says something. Then if I'm Goldman Sachs, I can make Trump say whatever I want because I got my advisors surrounding him, and they'll get him to say whatever. So then that causes it to go up, and now the whole Nasdaq has gone up, and I've now moved the entire market by just investing like $144,000 on Friday. I've moved the entire market up 1%. The entire stock market, like that's a $1 trillion move practically. And that's all it takes to manipulate the market. So what's going on now is you have this frenzy of people coming in to buy that feel like they're missing something and they're late to the party. And you have these people, these manipulators who are very happy to bring them into the tent and say, come on in with your money, buy our stock. So they're, and still, even if you look at the money flows now, the large investors, let's see if I think we have a money flow thing on here. SPX. Hopefully there's a money flow on the bottom of it. Oh, okay. Well, this doesn't show you. It doesn't show. It doesn't show commercial and rate. Oh, I think the FinViz will. But anyway, see when the money flow is coming in. Money was genuinely coming into the market in the beginning into March, right? But since March, money has been going. Well, it's still coming in, but less and less and less, and it's actually turned kind of negative down here. The overall money flow of the S&P has gone negative. It got a little bit positive now because of this tax talk, but it was going negative. And that's when we lost the 50-day moving average. Now, we're up now because of this insane tax policy. But that's probably bullshit, too. And we'll see what happens when the S&P tests 2,400 again. What are they at now? They're at 23.95. So we'll see what happens. We hit 23.94.75 here on the futures, and we're at 23.95 here, and we'll see if it's sustainable. But I don't think it is, because once you hit a number like that, you trigger a lot of sell programs. This goes back to like what I learned when we used to do computer consulting for the investing houses. And the reason I came up with the 5% rule is because when you hit these whole numbers, you trigger a ton of sell programs that were looking to take their profits. And that's what happened. And that's what happened here. Everything was la-di-da until you touch that 24, and then all of a sudden a whole bunch of sell programs come online and go, whoa, time to get out. And they start getting out. And they'll sell and sell and sell because these sell programs all bought here and here. This is where the sell programs are buying. Then they're programmed to say, okay, we are 2,300 to 2,400, we're going to start selling. And see, it's kind of arbitrary, but it's also about a 5% move, so it's logical too. And they're going to get the hell out at 2,400. They pick that line, and so they've got to dump all this in this, at 2,400 or as close as they can. So they're going to take the loss on the way down. It's not a loss to them because they started up here. Their dollar cost average is here. Their dollar cost average, their average is here or lower. They want a dollar cost average out around here. And they do that by starting here and selling and selling and selling and selling and selling. And now notice the length of this line. There, it's about the same as this. So they're done selling, and now they take the market back up. and they take the market back up by having Goldman Sachs orchestrate. So on the way down, when it gets down to here, Goldman starts buying again because it's their program. They know exactly where it's going to stop. It's going to stop, and in the 5% rule, that's exactly the retrace you expect. So they know where it's going to stop. They start buying again, and then they have their boy Trump comes out with a ridiculous tax plan that's going to guaranteedly boost the market again. And now they get to do more cash out. But they probably will, because the thing is, you don't know if these guys are completely exhausted in their selling. And if they're not, 2,400 is going to trigger another wave of selling. Now, if that wave is weaker, less selling than there was before, you might say, ooh, the bulls may be taking charge of this trade. All right, so it's going to be very interesting. We're going to have to watch it very closely what happens over the next few days. Is this the week to take an RB long into the weekend? It has been selling off for a few weeks now. Okay, let's see. RBs coming for the meat, or whatever they say. RB. Well, I said 160 with tight stops this morning. It did not hold, so I wouldn't want to be the hero today. The gasoline build was terrible. Let's take a look at that. The market's selling off. There's C2100, 21,000. Can't hold it. None of these guys. This is the ES twice. So TF. Oh wow, yeah, everybody's selling off. Because what Trump is saying is disappointing, very good, and what his guys are saying, they're not actually going to be able to do this tax. They're basically just lying to you. RB, right. And I was going to look up the thingamajig. Petroleum status report. There you go. Google, come on. I look it up all the time. You should know this. Oh, wrong one. Sorry. There we go. All right. So we had a build in gas in Control plus. There you go. All right. So we had a build in gasoline of 2.3 million barrels. Not terrible. Is that the right math? No, of course not. That would be 240. So 3.3 million barrels. But still. So there's a build in gasoline of 3.3 million barrels. Last year, though, we were at 241. Now we're at 241. So what? But last year, gasoline was $2.16. Now it's $2.45. That's where your real problem is, okay? Gasoline was 30 cents cheaper, about 15% cheaper last year at the same inventory level. So it's kind of hard to find a good reason that gasoline should be going up from here. It's already up. The 15% better price is already in it. So what's the excuse? Last year, now see here, last year the refiners were supplying 9.4 million barrels a day. Now they're supplying 9.2 million barrels a day. So they're supplying less, and they're still getting a build. That's a really strong indicator that demand is falling off a cliff. I mean, it's deteriorating. And now we had a whole discussion here, not here. Today's post, we just had a discussion about this. I love Trump doing the Nixon thing. He just needs to make the little peace sign with his fingers. I'm not a crook. So where were we? We were talking about gasoline, right? We were talking about efficiency, fuel. Boy, did we talk a lot. There you go. Okay. So Craig's asked this question. And what we were talking about, which is that comment at 11:52. So what we were talking about here is Craig's asked about the gasoline situation and my overall view of it. And I said, look, here's what the deal is. I said, Obama passed these standards in 2009, but they didn't kick in until 2012. But the problem is in 2012, we were still kind of in a recession, right? The market crashed out in 2009. In 2012, people were still not like running out and buying cars. The whole auto fleet got very, very old. So we were sitting on all these old cars that didn't get good mileage. Now, 15 million cars a year being sold in the United States. And the fleet of the United States is 200 million cars. So that means it will take 13 years to fully replace all the cars that are out there at this rate, at 15 million cars a year. And that's slowing down a bit, so it might take longer. And then I did the math, and I said, okay, so here's the improvement, and we're not going to go through the whole thing now. But basically, it's 1 million less barrels a week of gasoline being used. But that's every year. So if you say starting in 2013 or 2014, what did I say here? Oh, so I said starting in 2014, it's 1 million less, and it's 2 million less, and now it's 3 million less. So it doesn't change, okay? You're always using, this year you're using 1 million less. Then next year another group of cars comes in that uses 1 million less. But the first group of cars is still using 1 million less. So now in 2015 it's 2 million less. 2016 is 3 million less per week. So we're using 500,000 barrels a day less gasoline than we were last year. And interestingly, that's exactly what the build is, right? The build in gasoline is 500,000 barrels a day, 3.5 million barrels a week. And we're refining 200,000 barrels a day less gasoline. So we're creating less gasoline. We're using less gasoline, and it may be more. I may have been too conservative because we're also exporting 3 million barrels a day. Last year we exported 1.5 million barrels a day. So we're exporting 1.5 million barrels of gasoline and whatever else we export. We're shipping out of the country. 1.5 million barrels more out of the country per day, not per week. And still, we're building up 3.whatever million barrels. 3.4 million barrels of gasoline is still being built up. That is a demand catastrophe. You cannot get, I should write about this tomorrow. You cannot get away from this fact. Last year, we made 9.4 million barrels a day. This year, we're making 9.2 million barrels a day. So we're making 1.4 million barrels a week less gasoline. We're making less. We're shipping out 1.3 times 7 is 9 million. We're shipping out 9 million barrels a week of gasoline. So we're making 1.4 million less. We're shipping out 9 million more. So that's negative 10 million. That's an entire day's use of gasoline less this year than last year. One entire day of our gasoline isn't necessary. That is not a pretty demand picture. Now, on the oil side, refinery activity, we actually used more oil. Okay, so something must have picked up, and what picked up is distillates. We did more distillates, probably because trucking is picking up. Now, the trucking fleet hasn't changed barely at all. Very, very different standards on trucks. They're very slow to change. They had a much gentler slope as far as ramping up into better mileage under the rules. And Trump's trying to reverse those rules, by the way. So he wants to stop this whole thing. Which frankly, if I was an oil guy, I'd want him to stop it too. But so distillates picked up, but the main thing that picked up is exports. We're exporting 9 million barrels a week. We're in an entire day of our usage. Not our usage. I'm sorry, an entire day of our imports. See, here's our imports. 7 million barrels is only for export. One day of our imports is only so that we can turn around and export it to other countries. crazy. I'm sorry, I mean extra, because the reality is it's 2.8. We're getting close to exporting half of what we take in. So it's a funny thing, because they talked about they're such liars. The politicians are the worst liars on the planet, because they talked about making America energy independent. And they did this last year, and it was, I screamed about it when it happened, but it's the kind of bullshit you have to put up with. They talked about making America energy independent. So the GOP in the McCain election was drill, baby, drill. It was all about making America energy independent, right? But now they passed laws that allow they weren't allowed to export this much before. They had a very strict limits on export. Now there's no limits on export. So now we're now the same import dependent, because now we're doing the refining for other countries. So now we have to do all this importing that we shouldn't have to do at all. And that of course keeps the price of West Texas crude high, because if we didn't need the imports, then we would have a huge glut of our own product. We'd have plenty of our own product, and we would have an easy time. We were importing. This is a big number. We were importing 2.8 million barrels a day less oil. That means anytime we need oil, we could always add something, because there'd be 2.8 million extra barrels floating around that we could order. Then OPEC would have to be cutting triple what they're cutting now just to stay even. I know, or some other countries would pick up the slack, but it would, and also, we weren't exporting all this gasoline, and we put more pressure on other countries to do more about conservation. Right now, all these old cars that we're getting, all the cash for clunkers, right? All the old cars that we're turning in to get better mileage cars here are getting shipped out to South America and places like that. So they drive around with the crappy cars to get crappy mileage, and then we send them gasoline. So it takes a long time to cycle these cars out. Believe me, when you go to Cuba, they store cars from the 50s. So it'll be a long time before any of those guys are getting 30 miles a gallon. But anyway, so that's the situation. So long on gasoline, I don't think right now is a great time to do it. I don't know where the bottom is in gasoline. Wrong thing. How did that happen? Oh, energy. I'm sorry. There you go. Gasoline, and if you look at this chart, in 2016, we bottomed out here, which is 140. It was a little earlier in the year, but we bottomed out at 140. So, and even here, in the middle of 2016, this is after the peak of driving, but in the middle, this is after Memorial Days around here. So after that, we crashed back down to 142. So I'm not sure this is going to hold right now. We could spike lower. So it's a very, very dangerous trade, and I would only play it on a crossover. So in other words, directionally, I would only play gasoline as it crosses from 159.9 to over 160, like this. Don't get fooled into playing it when it's right at the line. You want to pick it up when it's crossing over and have a very tight stop under, and it's an annoying play where you can lose, and you can lose a bunch of times before you win. So you got to keep tight stops. Let's see here. If I went in here, I would have been thrilled, right? Because it went flying up, and you make a penny and a half, but you also have to know to take a profit. Then when it comes down, you don't want to be fooled, and you don't. At the 160 line, you're not getting in here because it's coming down. When it comes back up, you get in. This one made nothing really, a quarter of a point, came right back down. So you take, if you didn't take a profit, you take a small loss here. Then this one crossed up and went right back down, small loss. This one went up and went right back down for a small loss, but then thank God you got out, right? Because it went down here. You have to be patient, and you have to just play with very tight stops. And you have to realize that getting a 1.5 move is huge, and you take that profit, and then you lose a teeny bit here and a teeny bit here and a teeny bit here until you hopefully get another break where it comes back over and does a good job. Now, the next place to play below 160 is 158.50. Is here. But looking at this pivot point line, I would probably want to wait till 158 because there's no real support here. But 158.50 has been good support in the past. So that's just from knowing that, I would probably play it off of that. But again, here's the problem. No conviction. Usually I talk about plays like I'm not making this trade. You're asking about this trade. Usually I make trades when I have conviction. In other words, if it goes against me, I'm willing to stick with it. I would not be willing to stick with this trade because I don't have any conviction because all the fundamentals are against it. The only reason gasoline is going to go up, that I think, is just because it always goes up into Memorial Day. But I would make that play closer to Memorial Day or after we see some real consolidation. Other than that, I would just play this line with a very, very tight stop as a day trade sort of thing. But I would not even get up to go to the bathroom if I had an open trade on this thing. I would have my finger, the second I do a buy, I'd have my finger on the sell. So on the whole, I just wouldn't do it because it's just too much hassle. Short story is no, I wouldn't do it. Can you please tell me more about the SDS trade from this morning? Oh, that's nothing. That was just, all we did was say, look, SDS is an ultra short. SDS is an ultra short on the S&P, and we said the May. We have 23 days left in May. And we're at 13, and the $13 calls are cheaper now. They're like a quarter, 26 cents. They were 30 cents this morning. All right, so now that's not fair because the S&P isn't even higher. That's a ripoff. Anyway, so they were at they're 30 cents this morning. Now, I wonder if I can do a chart. Quick chart. Quick quote. Quick chart. Let's see. There you go. That's cool. Okay, great. So these are the prices of this contract. If you want to do this, whenever you in Thinkorswim, you just go here where it says more info. I'm sorry, it's a right click. You can't see what I'm doing. It's a right click, brings up this. Then you go to more info, and there's a thing called a quick chart. And you click on that, and that brings up a chart of the option contract. So this is, you can see the symbol for the contract is in here. And by the way, you can copy this symbol and move it to the on charts. There's a flexible grid. So let's say I wanted to take it. I would take this and copy it. Control C. Oh, I'm sorry. You know what you can also do? You can also I'll show you that in a minute. Too many things to show. Shoot. It needs a dot. You have to have a dot before it. There. So if you want to look at it on a longer term, you can go to this is on the charts. You have flexible grids. It's an easier way to look at it sometimes. Point being, though, that here this morning we were at 30 cents, and I thought the S&P would pull back. So let's do SPX. Oh, it does. Try to match up the time frame. All right, close enough. So Thursday, 20th, or whatever. Wait, Friday, Thursday. Oh, I was right. Very good. All right, so Thursday we were at 75 cents. Earlier last week we were like 80-something cents. And here is the 20th, 19th, 20th over here, and before that we were here. So I'm saying, okay, that's 80 cents, and we're at 30 cents. So this would be like 50 cents, and this would be like 60 cents. So if the S&P pulls back, this contract, as long as it does it quickly, this contract will probably shoot back up 30, 40, to 40, 50 cents easily, and hopefully the 60 cents can be a double. So that's why I just made a good. It's a good fun play. It's a play that just has a nice upside that could come quickly, and the downside, probably the worst case, is we'll cash out Friday if it doesn't move, and it'll probably still be like 15 cents. So You're putting in $900 because we said 30 contracts. You're putting in $900 for 30 contracts. You could make $900 on a pullback, or the worst case is probably. And also there's a wild card, of course, that you could make much more. The S&P could really turn south. Like if what Trump, by the end of the day, if this tax thing looks ridiculous and nobody believes in it, and tomorrow everybody's talking it down and saying this is never going to happen, all of a sudden the last 2 days are going to start unwinding. And if that happens, you could end up in really good shape. This thing could go $1, $2, whatever. So there's the possibility of a bonus. So in other words, there's a likelihood of doubling your money. There's a possibility, a small possibility of tripling your money. There's very little chance of losing more than half your money. So the risk-reward is extremely positive. I usually hate to buy an option straight out. But in this case, the risk-reward is very favorable, and the conditions, it just makes a nice way to bet against this round. So that's all there was to that trade. That's all it was. Well, it seems like something. Trade, exit trade. There you go. All right. Oh, I'm sorry. I was going to show you something. So when you're in all products, you can also, when you right-click, you see where it says copy? You can copy the symbol, and then it works perfectly. And then you go to charts, flexible grid, and all you do there is just paste it in. So you just go Control-V, and it pastes it right in. That's nice. If you ever want to get better views of the charts, and you can copy and paste several symbols. You can look at several options contracts. It's good sometimes to compare options contracts, and you can also do it if you're into pairs trading, which I'm not, but you can also do it for pairs trading. So I hope that was helpful. Coffee is the worst trade of the right here. Yeah, so far it's the worst trade. Coffee has been very disappointing, but we knew that. I mean, that's why coffee fell out of our trade of the year. We thought this might be the wrong year. We were kind of gung-ho on it last year, and we were right, because last year we started buying coffee, and it went crazy basically up to here. From where we are now, we went up to whatever that number is, a big number. Over 150 anyway. So 180. We almost hit 200. So when we started buying coffee, May was when I made the initial call of coffee. I liked coffee when it crashed to right where we are now. Basically coffee fell to where we are now, and I said this is a little bit low, and I laid out my reasons for global warming and blah blah blah. And I was on TV at the time and I was talking to people about it, and I said, But by the time we got to November, this was going to be my trade of the year for 2017. But what happened is by the time we got to November, it had already made so much money. We got, we were basically getting out of our position. I still wanted to have it, and we accumulated some on the way back down here, but it's been disappointing since then. But now I got back in the futures because I just a couple, but I mean back in the futures here because I want to be in coffee for the next 2 years. But I don't know when it's going to turn back up. I just think the same story that drove it up last year and the same crop issues that drove it up last year will probably come along in the summer, but you won't know until the summer. All we're getting now is we're getting the crop reports from the Southern Hemisphere where they're pulling their coffee. The Southern Hemisphere is finishing their summer, and they're getting into fall. They're harvesting. So their harvests have been very strong. That doesn't mean the Northern Hemisphere's harvests are going to be strong. That has zero correlation. It doesn't have a negative correlation. It just has no correlation whatsoever. So we don't know whether or not the Northern Hemisphere is going to have good crop reports. They had bad crop reports last year. That caused coffee to go flying up. Now, this year, a lot of people got into the trade, and they've been hugely disappointed, including us, obviously. But I think that either this year or next year, you're going to have the global warming issues are going to really start hitting. Although there's a problem because somebody came up with something. There's something called a rust blight on coffee, which is, I don't know what it is, I guess it's a rust color. But there's a rust blight that hits the coffee crops. And if it's too warm, it hits them a lot harder. And somebody seems to have come up with coffee that's resistant to that. I think Starbucks has worked with some scientists and come up with a better coffee bean. Now, the funny thing about Starbucks is it doesn't have to taste that good. If the bean isn't as tasty, who's going to complain at Starbucks? Because it's all sugar and crap and mixed with all the stuff. It's not pure coffee, so the people who drink at Starbucks generally are not pure coffee drinkers. They're drinking candy with coffee in it, basically. So Starbucks, because how there's like the tomatoes that are in the store, like they have these tomatoes. Well, all tomatoes. You don't have tomatoes that like squish anymore. It used to be a good tomato was like if you pressed it too hard, your finger would go right into it. Now they've all got hard skin, which is better for shipping, but it doesn't taste as good. So, when they mess around genetically with things, they change the character. But but Starbucks is like, well, we don't. It's good enough for Starbucks. That's all that matters. If it's good enough for Starbucks, then people are going to start growing it, whether or not it tastes good. And if that's true, then that's going to vastly improve the coffee crops. And I believe that was the catalyst that really hit coffee here. I think that was good for a lot of this drop. Because that news was people looking ahead and saying, wow, because this is going to really change the environment. Because let's say you lost 15, 20% of your crops to blight on an average year, right? If you're a coffee grower, then by the time you're done with your harvesting, you have to throw out 15, 20% of your crops because they got hit. Now, what if it goes down to 5%? Then now they're going to have 10% more crops. They're growing the same crop, but now the beans are more resistant to blight, and then you've got more crops. You have more yield. So again, things change. So the coffee trade is not as attractive as it was, and in November we just thought that climate-wise it might take longer than 1 year to go, so we didn't want to make it the trade of the year. But we still like it, and I still do like it. I still think long-term there's more factors than just that one to look at. But we won't know until the summer. And meanwhile, does that say 130? Has that actually gone down to 130 while I'm talking? Is that you guys selling because of the coffee blight? Oh, no, that's the end of the day. So that closed. They closed trading, KC. Let's see. I guess it closed on a down note, which is what happened last week. It closed on a huge down note. Yeah, look at that. So stop trading now, but that's a nasty downturn. Right into the close. And that's what happened last Monday. Is that on the chart? Yeah, see, last Monday we had this nasty downturn here. Oh, no, that's not last Monday. So, yeah, 5 minutes. Let's go to 10 days. There we go. No, it wasn't Monday. It was Tuesday. I knew one of those days. See, remember, on Tuesday, we had a nice day, and then all of a sudden, boom, and it collapsed. And then it kept collapsing. And here we are. Now we drift along, and now we have another little collapse. So this is not going away, unfortunately. It's getting really poor. All right, so where are we? So anyway, I'm thinking 130 is going to hold. I really think so, but there should be buyers coming in. But that was crazy. Whatever happened to the close just now is crazy. How's RB doing? RB is drifting along. So by default, if everything isn't going your way in a futures trade, if everything isn't the way you thought it was going to be premise-wise and all that, you should be getting out. And unless you are convicting, especially expensive trade like coffee, you've got to have either the conviction that you say, if I'm down $5,000, $10,000 over the long haul, I'm willing to ride it out. Unless you can comfortably do that, don't be in the trade. Because there's no way to know what the actual bottom is. Although this is really, look at that. I mean, we are now lower. Because we were just looking at this and saying that was low. We're now below this. This is back to 2012 low. Let's see how far back we can go. It's like it's never been this low. So is coffee completely collapsing? Is it going to go to 100? Is it going to become a worthless thing? That's hard to say. Oh, yeah, we even looked at that before. Large traders. See the large traders getting out? Boom, 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 boom. They're running away, and small commercial hedgers are coming in. That's not good either, though. If the commercial hedgers are hedging, that means that they're selling their crops. They're selling their crops at this price. They're trying to set a floor on coffee so that they get paid this price and whatever the spot is. And the more they do that, the more they hedge. So in other words, they're selling contracts, they're selling puts basically that allow them to put the coffee to the buyers at a certain price. So let's say they're paying $130. Let's say they're paying $7 for the 130 puts. So what's happening is people are buying the 130 puts. I'm sorry, not buying. People are selling the 130 puts for $7. The coffee growers are giving $7 in exchange for the put contract, so that they can be sure that when it's crop time, at least they're going to get $130. Because if they can get $130 or net 123, they know what their floor is. They're probably like saying, "I'll be bankrupt if my crop comes in and coffee's at $100, and I have to sell my crop for $100. I'm going to take a loss because my cost of producing coffee is 120." So they're like, "I can't lose 20% of what I sell. I'll be bankrupt." So when you see the sudden run up in hedging, that's not a good sign. Commercial hedges means the people who are selling the coffee are selling puts to lock in the price. And if the price is not even good and they're running to lock it in, it means that they're very worried that it's going to go lower and lower. So it's not looking good for coffee. Let's put it that way. Right now, it does not look good. Have they been wrong? Well, let's see. They here's what they did. Here's a spike in 2008. There was a spike of interest in hedging, and they were wrong, and it went flying up. And somebody made a mint, obviously, on that trade. Not the guys growing the coffee, though. Somebody else made a mint. Then it went down. They lost interest. Obviously, as the prices are going up, they lose interest in hedging. Then at the top, they wisely get interested in hedging again to lock in that price. And they lock in that price. Then it bottoms out. Now they don't want to hedge anymore because they think this is cheap. And it goes back up. Now it starts coming down. They want to hedge it again to lock it in. And it comes back down. And now, but here's the weird thing though. Now, even though this is barely a move up, they're locking in that price. I'm sorry. No, they were losing interest. They didn't want to lock in that price. But suddenly something changed. So right here, basically, something changed that made them panic and start hedging. So even as the coffee price was going down, they said, "Oh my God, we're going to get screwed." And you don't have to know what it is to say, this is not a good trade. So it's a scary trade. I still think that overall environmental reasons, that this is going to go like this. I think that, and again, I'm a lefty. I think that we're doing a lot more damage to the atmosphere and the earth than people realize. I think that you're going to see some really nasty weather in the next couple of years, and I think that's going to impact sensitive crops like coffee. And that does not have anything to do with the rust, rust blight. And there's also bugs that eat the coffee and stuff like that. And if they live longer, because there's a longer, warmer summer, the longer they live, the more coffee they eat. Those kind of things. There's all kinds of problems that can come up. So it's possible that these guys are all wrong. But again, they're pretty smart guys, and you don't want to be too far against them. You don't want to make that you don't want to go bankrupt betting against them. So best if you're, unless you're really willing to sit there and say, okay, win or lose, it's okay, whatever. If you don't have that attitude, it's not a good trade to stick with as it goes lower than this, and especially if 130 doesn't hold. So there you go, Clay. It is either the worst trade or the best buy. It's hard to say. Apple earnings play. No, thank you. I think Apple has. What quarter one? In Christmas time, there was really no competition because everybody was kind of staying away from Samsung, and Apple ruled it. I don't see how they're going to grow much off of that. I think the first quarter is obviously going to be down from quarter four. I don't think that, but again, I think they're doing great. I think they might, obviously they'll compare it to last quarter one, which is going to be probably a good comparison. I think going forward, though, and they're not going to be wrong, they're going to guide very conservatively. I see too many stories about the delay in the iPhone 8 that I don't think it's going to come out until like Christmas time, until the end of the year. I think they're going to hit I think they'll hit it for Christmas sales, and it's going to be huge. But also, though, now Samsung has got their phone out. So Samsung has a phone out and Apple doesn't right now. So they're not going to have this incredible advantage they had last quarter. And I think that a lot of people are going to want to jump on Apple and talk them down over that. But I would never bet against them. I would never bet. I mean, it's the greatest. For me, it's the greatest company on the planet. So I certainly wouldn't bet against them. But I'll be interested to see how it goes. We are kind of betting against them because we have some short calls in the portfolio that are deeply in the money. But it's more of a matter of those plays are not a bet against Apple as much as they are locking in the gains that we have on our long-term position. But at the moment, painful because we did sell short call. What do you think of Ford? I know you like GM. No, we like Ford better than GM. Ford is our favorite. Ford is like Ford is such a good stock. Okay, they pay a 60-cent dividend. I think it's in our long-term portfolio, isn't it? Well, making a portfolio, I call it chill portfolio. I added a portfolio to keep track of the things I say on TV. Let me see. Ford. No, Ford's not in the 5%. Yeah, Ford in here. No. Oh, we have GM. Oh, that's funny. I forgot. We have GM in here. Okay, so we did buy GM because it was cheaper than Ford at the time. But in the long-term portfolio, I don't even think we have GM. Here, so we have Ford as dividend stock. Did we ever buy the GMs? Oh, we did. We bought GM too. Okay, so we have Ford and GM. So yes, I like Ford. That's the bottom line. I like Ford, and they pay such a nice fat dividend that the way we played it, which is still not really playable like that. We bought 2,000 shares and we sold the 11.75 puts and calls. They're right at 11. They're right at that spot. So this was our predicted price. You could still do the same thing. You buy the stock for 11.68. So you'd be buying the stock for a bit less than we bought it. So we have a loss there for 6.50. Then you could sell, but you can sell in 2019. So the problem is time, because we did this last February. So these are decaying. This is exactly what this position is supposed to do. We're collecting our dividends. I think if I open that up, yes, the dividend. It says like 300. For some reason that was 400. 300. It says it's like $9, $12, $1,600 in dividends since we bought the stock. Well, where are all the dividends from 229? We got ripped off. I got to figure out what happened there. That's weird. There probably should be more. But theoretically, obviously, there's dividends all the way going back to 229. So we collected $1,600 worth of dividends, and we only spent net. See, 24 minus 4 minus 3 minus another one is 8. So we spent net $1,600. We collected 10% of this price in dividends. So 10% of what we laid out, we collected in dividends already. And we're going to make, and we're up another $22,000, $4,000 on 16. So we're up 20 since February of last year. We're up $4,000 plus we're up $1,600 in dividends. So and that's off a net $1,600 investment. How could you not love this? So if you wanted to do it from scratch as a new trade. Oh, by the way, when I'm on that NASDAQ show, very important thing to know. See, you don't realize this when you watch TV, people. I was told on the NASDAQ show not to talk about any stocks that weren't on the NASDAQ. literally. So I could only pick, that's why I picked Gilead, because I can only pick a NASDAQ stock. I can't talk about Ford on the NASDAQ show. They're not in the NASDAQ. No matter how much I like it, if she said, what's the best stock in the world right now? I'm saying Gilead because I can't say Ford. And it's so dishonest, like the whole system is rigged. And all the stuff you see on TV is so filtered and manipulated. It's really awful. Just want to say that as a disclaimer. Very, very annoying. You know me, it goes against my grain. I like to have everything on the table, and that just pisses me off. That's why sometimes you see me on TV. I'm like, Ugh. I'm like, I have something else I want to say, and I'm not allowed to say it. I mean, I can go up on a tirade and say it, and maybe they'll broadcast it, but either they'll edit it or it'll be the last time I'm on TV anyway. So you have to basically play ball if you want to do these things. Anyway, so with Ford, we don't think a stock that pays out a lot of dividends, it's not going to go up as much in price because they're paying their profits out in dividends. Therefore, the value of the company isn't increasing that much because they keep shooting their profits out, and it doesn't go into building more stuff. Now, with a car company like Ford, it doesn't make sense for them to build more stuff. They already have their share. It's not going to appreciably grow. They've got plenty of cash, so there's no reason for them to keep all the cash. They should distribute it to their shareholders. But it's not a growth play, and you need to recognize that when you go into the stock. So the mistake people make is they always want to go, I want to get a high option. I want to make sure I have room to make money. I go the opposite way. I'm like, no, I want to have a low basis because I'm going to collect my dividend. My main interest in the stock is to collect my 60 cents a year in dividends. That means I want my basis, my layout, to be as low as possible. So if you're buying the stock for $11.66, what I want to do is I want to sell the $10 calls, and those are $12.12 at the moment. You can do better than that, though. Let's say $12.15. I'm sorry, $2.15. 12. At $2.15. You're paying $12.15 net. So in other words, if you get called away, you're getting called away at $12.15 with a 50-cent profit. That's fine because 50 cents is bigger than the dividend, which is 15 cents a quarter. Okay, so 50 cents is your normal. 50 cents, if you get called away, you don't care because it's bigger than the dividend would have been, the amount of money you get called away for. So you sell the $10 call. By selling those for $2.15, where are we? Calculator. All right. So we start out by paying $11.67 for the stock. Then we sell the calls, $10 calls, for $2.15. That's $9.52. My basis is now $9.52. We're also going to sell the $10 puts for $1. So now I'm going to minus $1. So now my basis is $8.52. All right? Because I sold the puts and the calls. I'm obligated to buy more Ford at $10 if it goes lower. I don't mind owning more Ford at $10 if it goes lower. That's fine. So let's say ultimately you say, how much could you ultimately afford to own? And let's say ultimately I could afford to own $20,000 worth of Ford. That's going to be So then I want to have that's going to be $20,000 worth of Ford. Now don't forget, I'm already at my net. So if my net's $852, I could easily own 2,000 shares of Ford. So I would start off with either 1,000 or 500, depending on how patient you want to be, or anything in between. But somewhere between 1,000 and 500, I would make my initial sale. And so your initial batch, let's say I do 1,000, my initial purchase is $8,500. That's how much it would cost me to buy 1,000 shares. Then I've got 1,000 shares of Ford at $8,500, and of my net outlay. If I'm assigned another round at 10, another 1,000 at 10, then I'm going to be into $18,500, right? There you go. So then I've got a full boat assignment, and my average would be the average of 852 and 10, so 1850, 975. So my average would be 975. That's a very substantial discount from where we are now at 1166. So my worst case is I get 4 to 975 average for 2,000 shares. That's my worst case. My best case is and plus you get your dividends either way. My my best case upside is I'm going to get called away 10. Don't forget I sold a $10 call, so I'll get called away 10 with a $1.50 profit here, which is almost 20%, plus another 10% on the dividend, so it's 30%. So in 2 years, I'm on a very clear path to making 30% on my 852. That's great. If you have a solid, steady stock like this, where your best case is you're going to make 15% per year, 30% total, and your worst case is you're going to get assigned forward at like a $3 discount, a 25-30% discount. That's fantastic. The worst case is a great case. So that's how we do these trades. Very simply, you buy the stock, you sell the call, sell the $10 call, sell the $10 put. That drops your basis down to 852. And now you're in forward for 852, and that makes your 60-cent dividend, like 8% or something like that? 9. What is it? 60 divided by 852. 60 divided by 852. 7%. Okay, so 7%. So now you've increased your dividend to 7%, plus you got the you're going to make the 15%, the 20% if you get called away. So it's really 14 plus 20, 34% is what you're going to net out of the trade at the end. And it's a super conservative trade. If you have millions of dollars, you can do it with millions of dollars. It's a huge company and has tons of stock and heavy trading, tons of options. So, when you have a large amount of money to put to work, it's a little harder to make these kind of option trades on small companies. But this is a large cap company, pays a huge dividend, very steady, very safe. Even if something horrible happens, the government's going to bail them out. Maybe not this government, but a normal government would bail them out. It's a great kind of trade, and I love these things. And because of the low price and the good option prices, it makes it fantastic to trade on. All right. Is he opening a federal land today so he can build? Is that sick? Don't get me started. I don't want to talk about Trump. Honestly, do not get me started. He's like selling off the federal land. They're freaking like Greece. We're just like goddamn Greece. He's putting the people on austerity. He's taking all the money for the rich. Don't get me started. Stop. Okay, I'm not talking about it. So angry. These large stock moves, Microsoft win is now impacted recent butterflies. How do we adjust our against rule? Okay, we don't do anything for now. We want to see where it ends up. The biggest thing in the butterfly portfolio was like 235 last time we checked when we closed it. It is now 228. So we've lost $7,000 in the butterfly portfolio. There's no reason to panic. You let it play out and see what happens. So at least another week, we want to see if these levels stick, because we don't know that they're going to stick. So we want to see what happens, let it play out, and if we have to reposition, then we'll reposition. Now, obviously, if it sticks, then we've got tons of cash, and we would make a bullish adjustment. So in other words, so if these levels stick, and let's take Win for an example. In Win we sold, we already rolled these to short call. In Win we sold the 145 call, those are not in trouble. We have the 120, 145 spread. We sold the 115 calls, those are deeply in the money, but we sold them to 650. All right, so it's not a big deal. The only problem is that the 120, 145 spread is not particularly profitable yet. It will be, but it's not yet. We bought it for $6. Net 6 here, 15 to 9.45. So we bought this spread for $6. It's a $25 spread. If Win is at 145, we are going to make $19. On the 115 calls, we're down $6. It was 6, now it's 12. Okay, so instead of making $19, we'll make $13. This is not a crisis. It only seems like a crisis because we haven't realized our gain yet on the long position. But if WIN is persistently over 125, what we will do, because we have not realized our gains yet on this spread, currently it's $10, and it's a $25 spread. So we can still buy this $25 spread for $23.50 less 13. It's about $10. So all we do is buy more for $10, double it, and then we could roll and I'll show you, we can roll the short 115 calls in June. So let's see where they could roll to. WYNN. So remember, we buy more $25 spreads for $10. That's our worst case scenario. Again, the worst case is great. We buy more $25 spreads for $10 because they're so in the money that we're worried about our short call. Now, I look ahead to January 2018 because our play is 2019. I look ahead to January 2018 and I say, what is $13? The 125 to 13. So I can roll from 115 to 125 without changing the position at all. And we'd be double covered. Or I can roll to 2 times the 140 call. So that means if I roll to 2 times, if we double the position, it would cost $20,000 to buy more. If we double the position to buy 10 more at $10, 20 more at $10, and then we double the short calls and roll them to a higher strike, we'd roll them to the 140s. That means now we would have a $15,000 profit plus a $19,000 profit is $34,000, right? So we'd have a $34,000 profit before we owe any money at all to the short callers. So those short callers would then have to be, and it's 4,000 contracts, so let's say that's about $6 a contract. So the WIN would have to be over 146 before this could possibly hurt us. All right, so basically, 146, sorry. So it'd have to be over 146. And if it's over 146, you know what we can do? We can adjust it again. Now, because that's so easy and so painless, it's like, oh, I'm going to make another, my worst case is I'm going to make another $15,000 because WIN keeps going up. And then I'll have to worry about the short puts one day, the short calls one day. That's my worst case. That being the case, I'm not going to worry now about anything. I'm going to just sit and watch and see what happens. If I have to roll, I'll roll. But I might not have to roll. I might pull back. Probably won't, though, because everything's going super, super well for WIN at the moment. But I'm certainly not going to react today, and just because it went up today and it blew out my price, which it did, it's $8 change. So just because it blew out my price today, I shouldn't react today. Let's give it a week, see what sticks, take a look at the levels, and as we get a little closer to expiration, we'll say, okay, now we're going to make an adjustment. So I don't like to take $20,000 out of my cash pile just to adjust this position. In fact, probably because we can roll to these 125s here, they're even without doing anything, and that's $10 higher, and we're at 125, I would be more likely to do that just to lock in our gain. So we're taking the current short, what are they? We're taking the short 115 calls that are in the money by $12, that are $12 now, and we're going to roll them to the 125 calls that are almost all premium. So without doing anything else, we're going to sell $13 more, $10 more, $12 more of premium. So, and then God bless them, let it go up over 125. Let it go to 140. So 140, then we're totally in the money on our long spread. And these $80 puts we can always sell. Now, if we really think WIN isn't going down, we can buy back the $80 puts and sell some higher puts to balance it. But you see, as I'm saying that, this is what happens when I look at it. I know I do it a lot, because I always say, oh, what are you worried about? It's too early. When I look at it, that's my thought process. Is I look at it and say, well, look at it. I can fix it like this. I can fix it like that. I can fix it like that. And I can fix it like that. So why fix it? I see 10 different ways to fix this trade. Why fix it at all then? It's like when you're playing chess and you have 5 good moves to make, 6 good moves to make, whatever. Then you're not worried about the game, right? When you get when you start getting boxed in, when your opponent does something smart and puts you in a corner and cuts your choices, that's when you better make a move. You can't mess around anymore. You've got to make the right move, otherwise you're going to lose the game. We're nowhere near that. Right now we have a completely open board where we could do 1,000 different things. So there'd be no reason. So when you don't have to do something, like in chess again, I don't have to commit a big piece. And for me, a big piece, we have $250,000 in cash. I see one of my favorite ideas for a fix would be doubling this position because it's been so great and makes so much money. Do I want to though take 10% of my cash and put it into win instead of getting a brand new position? The thing about a brand new position is I like the diversity. I like to be more diversified, not to start concentrating into a big position. And frankly, that move of doubling the position is sort of something you do when you don't have any other choices. We have plenty of other choices, so my top choice right now would be to roll these to the 125 call. But because these still have premium, 115 plus 12 is 127. So right now these things are 127 net, and we're at 126. They still have a buck of premium, not much, but a little. But I still would rather have them there to lock in my gains in case this thing pulls back. Because it went up $8 today. So it could go down $8 tomorrow. If good news can make it go up $8, bad news can make it go down $8, right? So because I don't know what's going to happen tomorrow, I'm going to just wait and see. And if it goes up $8 again tomorrow and $8 the next day, then I know what I'm going to do. I'm going to double down on this, and I'm going to roll these to a higher strike, and I might split them and double them. I might split, I might move these to 40 at a higher strike, at a much higher strike instead of a little bit higher strike. But I know that I can easily roll these to the 125s now, and I can roll them to 2 times the 140s, and I would still have a year to roll them even more. So it's hard to, I just can't, I can't get motivated to do anything if it's that easy to fix. And of course, waiting, there's no penalty for waiting. I get more information because I waited. Every day I wait, I get to see what happens, and I understand better what the situation is. Yeah, that pisses me off, that gasoline too. They have not changed the price at all. Even in fact, I was just telling my girls that. It's so funny. On this weekend, I was saying, because of course they put the gasoline tax in though. That's one thing, because now we have like a 30-cent gasoline tax. So because of that, I think that it wouldn't have been a big move, because now gas by me is like $2.25, $2.30. So I'm in North Jersey. And so it's $2.25, $2.30, $2.40 if you go to a bad place. But 30 cents of that is tax, so it's really $2. So if it moves 10 cents, that's a lot, but it doesn't seem like a lot when you're looking at $2.25, $2.40 on the pumps. But yeah, it's really, it should be lower. It should be probably closer to $2.15, $2.20. But what are you going to do? I think because of the tax, people are accepting like much higher prices. The White House announced its tax plan. Oh, and what happened to the market? Nothing, right? Don't chase stocks. Wait, Stephen, then, yeah, I don't know. Anyway, so, all right, well, so the White House announced the plan. We didn't go up any higher. So I think this is all baked in, and now we're going to see how people react. What about Joe? Joe's the same thing. Joe is coffee. So, I mean, we're we're going to have to take a very skeptical look at Joe, and I think I already said, though, I don't think I want to press it. I think we're going to give up on it at this point, because it might be throwing good money after bad. So we'll take a loss in the portfolio, clean up the spot, and say, okay, that didn't work out. Sticking with it, if even a year from now we still don't know what it's going to do, it's not that attractive, unfortunately. But we'll, again, we're not in. I don't want to rush into it, but we'll have to make that decision at some point. What time is it? Oh, 2:30 already? Jeez. Color munching and asking principal tackle munching. Yeah. There was a letter from somebody in the site posted a letter from, I think it was Cruz, from Ted Cruz, talking about, how it would be terrible to regulate the drug companies because then they won't innovate. And because America doesn't regulate the drug companies and doesn't tell them what they should charge, they make all these drugs that are really expensive and that we benefit from them. Well, you don't benefit from them if you can't afford them, you idiot. It's so crazy. But you know what it is? Because rich people don't care what it costs to be cured. That's the trick. When you're paying your insurance, you're paying to subsidize the cost of the medicine for the rich people who can afford it and want it. You can't afford it and you don't want it. They want anything to stay alive. You want to stay alive too, but they want anything to stay alive because they got lots to live for. They got piles of cash to build. And so they're like, I mean, I know people who like fly to Germany to get like to get like a week of like blood changes and things like that. I mean, these guys go to real extremes to like live longer, and if they're on the boards of these pharmaceutical companies and they want every freaking cure to every single thing found, and they want to make sure they have no cancer, they want to cure every single thing no matter what it costs, because the cost doesn't matter to them. And that's why the Republicans talk about these death panel things. This death panel concept. Europe, to some extent, has technically death panels because Europe says sometimes they're like, you know what, this is too expensive. You're going to die. Okay, it's too expensive to cure you. You can't be, you can be cured for $10 million, but we're not going to spend $10 million to cure you. I'm sorry, you are going to die. It's not unreasonable. Because the detrimental effect on society, when you sit, it's like your dog. Like you have a dog, and your dog is dying, and you have to say at some point, it's like it's a dog. You let it. It's going to die. Every life can't be extended to the maximum possible amount, no matter what it costs. Otherwise, we just bankrupt everybody. So the onus of the push to cure everything is not coming from the poor people who are paying and subsidizing these cures. It's coming from the rich people who are saying, I don't give a shit what it costs. I want a new heart. I want new blood. I want you to freaking change my genes. They don't care what anything costs. They'll spend the money. And they don't care whether it's insured. They'll spend the money. But you should care, and you're being forced to pay for it through your insurance because you might get that disease. And yeah, you might get that disease, and your mom might get that disease, and it's horrible, and people die. It's weird. My dad got cancer and didn't want to go for exotic cures. I wanted to, and he was like, he said no. He goes, look, what's it going to do? He said, what's it going to do? A few months, 6 months, 7 months, 8 months? He goes, what am I going to bother for? He goes, I'm going to fly all over the place. I'm going to see all these doctors and do all this crap just so I can live a few months longer in pain. He said, no, thanks. He goes, it's my time. And I have a great attitude. I don't know if I'm going to be like that. I think I'm probably going to fly. I'll probably fly wherever and get cured. But it doesn't come from the regular people. It's an issue that's being forced on people. And these drug companies spend billions of dollars researching things to cure just in case somebody rich comes up with a disease. And yes, the side benefit is poor people get cured, but only if they pay into this giant insurance pool and spend a ton of money. And that's what drives the insurance costs up. It would be better to educate people, as in Europe, where they say, look, certain things kill you. You can't cure everything, or you can cure everything, or you can cure almost everything, but only if you spend incredible amounts of money. And we're not going to do that. We're drawing a line. And we're saying this is worth curing, this is not worth curing. And that's reality, and that's what can be afforded in a reasonable system. We have an unreasonable system that does crazy things. And it does crazy things because the people who actually control this crap, like Congress exempted themselves. Congress is taking away Obamacare, but they're keeping it for themselves. They just talked about that today. They're not changing their health care system, which is Obamacare now, because they like it. It's too good. But they'll take it away, but they'll take it away from everybody else. And they need to, too. They have to kill health care because that's like half of their taxes, not half, probably about 1/4 of their tax breaks are going to be paid for if they hear the health care. Freaking insane. All right, now you got me started again. Anyway, stop talking about these guys. Coffee, was that a new plant? If so, there are 5 to 7. Yeah, you're right. I don't know about 5 to 7 years, but it certainly takes a year or two. But the market does that all the time, though. It reacts to something. And again, that's why I don't like to do anything right away, because the market reacts to something as if it's going to happen tomorrow, like Tesla. Now he's talking about, he's like, oh, electric trucks, and he talks about electric trucks. It's amusing from this guy. And Elon Musk talks about electric trucks, and the next day some guy writes up an analysis and says, well, if Tesla has electric trucks, it's going to make them another $5 billion. And it's like, what? It's like they'll take the entire, his premise is they're going to take the entire electric truck market and make 40% margins on every truck they sell, unlike every other truck manufacturer in the world, who makes 5% on a truck. And it's like, where's the logic to this? And how is it better to have, what truck company is going to pay to have their drivers sit there for, it ain't going to be no 4-hour charge when you're charging a truck. What truck company is going to pay their driver and their truck with all this stuff in it to sit for a day at a charging station, for 8 hours at a charging station, 12 hours, whatever? The only thing I can think of would be, let's say a truck needs 4 times more batteries than a car. I'd say 6 times more batteries in the car. So aside from the weight of the batteries, and as you know, weight is really key in a truck, so that right away seems wacky to me. But so aside from the weight of the batteries that you need to make the truck work, because they have weighing stations, they charge you the weight. The weight costs money. So just because you can make an electric truck doesn't mean it's a good idea. So first of all, they got to pay for the truck to go on the road by the weight. That's number one. Now you say, okay, they'll only use the roads that don't charge by weight. There's plenty of roads like that. I could see doing it by only going on roads that don't charge you for the weight, only going on routes that are short enough where the driver drives a one stretch of whatever, 8 hours like in the truck, and then the batteries are dead, and at the destination he gets to, he charges the truck. But think about the logistics of charging it. Even if you have overnight chargers that can do 4 or 5 hour charges, you still have to have 6 of them hooked up to each truck. That's a lot of freaking electricity. And by the way, I looked on Tesla's site. It was interesting. They say it costs $1.58, the equivalent of $1.58 a gallon to charge your car with electricity costs. $1.58. And gas in Jersey is $2.40. So I'm saving 90 cents. So, if it's 90 cents a mile and that's all you're saving, then the truck company is going to have, if their driver's got to sit around doing nothing, that's not worth it for them right away. All this stuff seems so easy. And these analysts that come out, the analyst doesn't know anything about the trucking industry. All he has is a bunch of numbers. And Elon Musk says this, and he extrapolates it out to these incredible numbers. He says, oh, they're going to take over the entire trucking area, and there's nobody who can compete with. And the fact is, Volvo already has electric trucks, and nobody's interested. They use them for like short routes in Europe, and for like local driving and stuff like that, which is nice because they don't pollute. It's like mail trucks. They don't pollute and they don't make noise. But it's just not popular. There's no demand. And that's also why now the big three make a lot of electric cars, yet there's no demand. The demand isn't there. Tesla says, oh, we're going to sell 400,000 Model 3s. I mean, aside from the fact it's hard to make 400,000 cars when you only made 50,000 cars last year, the thing is that, yes, they got the deposits, but ultimately, after they exhaust the people who really want them, then what happens? Then where's the business? Because the big three auto companies, if there was demand for millions and millions of electric cars, they'd be making them. But they're not. They're only just starting. They only do limited amounts because the demand isn't actually there. And it's not because nobody else can make a nice car. That's stupid. It's like Mercedes knows how to make a nice car. BMW knows how to make a nice car. In fact, they make a totally cool electric car. It's a limited run. Nobody really wants it. It's not for their lack of engineering skill. It's just that it's not really that much demand for electric cars because gas isn't that expensive, and you don't save that much money, especially when you take into account the cost of electricity and the cost of putting a charger in your garage and all that. It's like $1,500 to put in a charger on top of what you spend for the car. Once these credits go away, Tesla only has like 50,000 credits left for their cars, because each car company is giving 250,000 vehicle credits for $7,500. Trump is not renewing these credits. Once these credits wear out and Tesla sells a 250,000 car, that's it. Then all their cars go up $7,500 in price. No more rebates. That's a crazy business. People just do not think these things through. Anyway, how do we get on that topic? Munchkin. I think his name is Munchkin. Mnuchin says Trump has no intention to release his returns. Well, no kidding. He's never going to release his returns. His returns probably show like a huge check from Putin or something. Was Frontier closed out? No way. We love Frontier. Bye. Freaking love that company. That's another huge dividend payer. And people have, I said this the other day, people don't have the patience to invest in a phone company. Phone companies spend tremendous amounts of capital to build and put in lines. First, they have to put in all the equipment. Then they have to put in all the phone lines. Then they have to connect it to all the houses. And then they have to sell it to people. It's a long process. And investors these days do not have the patience for this kind of thing. But long term, it's an incredible play. It's just a money machine, just like AT&T or Verizon. And yeah, AT&T and Verizon both had an erosion of market share because T-Mobile is kicking ass. Frontier, though, the moves Frontier has made, and the big expensive one they made last year that everybody hates, is they bought a ton of Verizon's customers. That's what's killing them. They took on a ton of debt and they bought a bunch of Verizon's customers. New York, in California and Florida, and I think Texas also. This is going to make Frontier national, though. They're becoming, like T-Mobile and Sprint did before, they're becoming a national company. That's what their play is, but it's a 10-year play. But you know what? I want to own this stock 10 years from now when they are a national company. It's crazy how people just don't want to take any kind of long-term investment. This is a very good one. $2, it's crazy low. And there's no reason to think they're going to stop paying their dividend. They give no indication they're going to stop paying their dividend. They may reduce it a bit because right now it's like 20%. What is it? You talk about a dividend payer. Nope. What was that? FTR. 42 cents. It's a $1.94 stock with a 42-cent dividend. So even if they cut it in half and it's 20 cents, that's still 10%. And if they cut it in half and it's 10, and if they cut that 42 cents out, watch this. Financials. I'll show you how much they're spending on this. Cash flow. Dividends. $700 million a year in dividends they're putting out. See, look at what they spent here. They spent $8 billion. This is them borrowing $8 billion. This is them spending $8 billion. But they keep paying. They not only keep paying the dividend, but they pay more and more and more. They're paying $700 million a year in dividends, and they just bought an $8 billion chunk of Verizon's business, and all that is just potential future profit. as these people convert, they don't have to convert. They already, it's like your phone company gets bought by Frontier, and your bill now says Frontier instead of Verizon. That's it. Now, are you going to suddenly switch? No, it's the same service. They even have the same technicians. They even bought the technicians. So they bought the same people, the same service, the same everything. They got the same offices. They bought everything in the state. They bought from Verizon, and now it's just put the Frontier label on. And yes, they are getting some erosion because the competition comes in and takes advantage of the switch, and they say, oh my God, you're going to hate this. Frontier took over your service, and it's not going to be the same, and here's our new package. Why don't you give us a try? Now, anybody who's dissatisfied with the service may find a reason to switch, and that's what's happening in Frontier right now. They are bleeding some customers. This is normal in a takeover. It's called attrition, and you expect to lose a certain amount of the customers that you buy. That happens. And then the job of Frontier is to keep the attrition under control so that they maintain 90%, 85% of the Verizon customers, and then they can build from there. But coming in, it's just too chaotic, and it's a time when your competition comes in and takes advantage and steals your customers. That always happens. And we're talking about millions and millions of people. There's no way to keep a lid on it. But as a long-term play, this is a ridiculously underpriced company. We repurchased our short calls when Ford was low. You suggested waiting until after the 12 to resell. Is that still the plan? Well, yeah, 12-ish, you know. Look, honestly, I know that you probably watch your portfolio every single day. See here? See what I meant? When I said 12, this is what I thought was going to happen. We're going to hit these resistance lines. So, yes, I would. If you're watching it every day, that's the time to sell. The reality, though, is what's going to happen to me is I'm going to look at it again when we do a portfolio review, probably, around the 15th of May. So whatever happens for the next 2 weeks, I'm not really going to pay attention because I can't. I can't every single day start putting out changes and portfolio reviews and putting change. I would drive everybody nuts, especially me. So the reality is I made that mention because that's the smart thing to do. I'm not necessarily going to do the smartest thing because I can't put that much attention into portfolio. Also, though, I take, most of our guys are not that interested in day trading. They don't want to be there every single day. So they like the pace of, review every, like every couple of weeks we look at the positions, we go over them, we decide if we're going to make any major changes. If nothing exciting happens, we don't. And by the end of the month, we make 5 changes, 10 changes, that's it. That's a good way to run a portfolio. You don't have to maximize every single move because if you do that, that means you're staring at every single thing all day long and your entire life is nothing but a portfolio. That's boring. Okay, that's not a good way to go. So what I said at the time was absolutely correct, and as soon as I look at the chart, I can see why I said it. Look at that. In fact, the way it's dipping, I would say for sure, the moving average is coming down. It's going to make it harder to get to 12. So as soon as you hit that 50-day moving average and you get a good price, and we're right below it now, that's the time to cover. Now, see, there's the thing. So if somebody asks me that in chat, I might end up putting out the move because I say, oh, yeah, that's a good move, let's do it. But at the moment, I think it's just basically core. We started at 11, and a 5% move from 11 would be 11.50, basically, or 11.60. In fact, this is a 5% line. So we're pausing at the 5% line. And that means that if we hold the 5% line at 11.60, we're almost certainly going to make it to 12. And if we make it to 12, then if we punch through 12 the way this thing just punched up now, then this thing can actually go all the way back up to 12.50. So my answer, if we punch over 12, would be to wait and see if 12 holds. And if it doesn't hold, then sell. But at the moment, I would hold out to at least 11.85. And if you get nervous there, sell. But we could go to 12.50. Think about it. The difference between 12.50 and 11.85 isn't that great. But again, one of the things I try to teach people a more passive way to play a portfolio, not to like constantly stare at things and constantly freak out about things, because it all works out. If you're well balanced, it will all work out in the end. Yes, sometimes you will not make the optimal amount of money, but again, the difference between the difference between squeezing every cent out of your portfolio and having no life, or making really great returns, which we do make in our portfolio. I mean, look, this is what is this one? This is the butterfly portfolio, up 228% since in 3 years. The 5% portfolio, coming up on its 2-year anniversary, 187%. The long-term portfolio, 177% in 3 years. And the short-term portfolio, 300% in 3 years. So that's without killing ourselves. That's having a life and playing the market by keeping balanced positions that are concentrating on collecting premiums and nothing else. So our job is to be a landlord. When we talk about being in the house, our job is to sell premium and be a landlord. So we're always collecting rents on all of our positions, except for those times when obviously, like this one we're discussing, where you take it off because you're expecting a move. But generally, when you're a landlord, you don't kick people out. You got a tenant. You don't kick the tenant out because you think somebody better might come along. You're like, okay, that's what I rented it for. Leave it alone. You'll collect your rent, and when you're done, you'll see what the market looks like and set your next rent. Okay? Landlords have long, happy lives. There are many more landlords in the Fortune 500, in the Forbes 400, whatever you call it, the billionaire list. There's a lot more landlords than there are traders. Because being a landlord is the way to go. Rent your positions out. Collect premiums constantly. Get a steady flow. It's, again, being in the house. Be Steve Wynn. We're complaining about how much money Steve Wynn makes. Be Steve Wynn. Steve Wynn does not go down to his table and say to a guy at the table, don't make that bet. I don't want to take that bet. No, he takes every bet because the odds are in his favor. And some people will win and some people will lose. And when we sell our calls and puts, some people are going to win and some people are going to lose. And more people will lose than win, and we will make money constantly. And really, really good money. That's the key to this thing. We will make really fantastic money if we stick to the program. And if you start second-guessing every position you have and changing everything as soon as it goes against you, you will get burned as many times as you do well. And that's not worth it. In the end, and only years of experience are going to teach you this. But because I can't. It's hard to say it. If you go back and look at the old portfolios, you will see so many times the position was like way against us, and then it came back. And we leave it alone, and it comes back. And yes, sometimes the position goes way against us, and we leave it alone, it does worse. But on the whole, 100% a year average return says that it's worth doing it. It's worth doing it this way. You don't do better by changing everything all the time. You don't do better by getting active. And in fact, you can see those statistics. They have this, look up active managers performance in Google. And you'll see there's been a big discussion in the last few months about active managers do not outperform the S&P. They don't. Active management strategies are a coin flip at best. You're guessing, and you guess wrong, and you guess right. There's no benefit to constantly changing your position. What we're doing is we're taking advantage of that fact, and we are selling premium to active traders. And let them pay the premium. We don't give a crap whether they make money or they lose money. We get the premium every single time. For sure, we get the premium. That's what we know for a fact. And that's what Steve Wynn knows for a fact. He always gets the premium. Board reports you want? Yeah. Okay, well, good. The focus on Utah lands that Obama approved and the state and locals did not want. How is the trade of the year doing on SLW? Probably not good right now because it's still going down a bit, right? SLW. All right. Let's see. Silver, it should be in the, well, let's look at the options opportunity portfolio. So the trade was, we sold 10, 17 puts. That seems to be in no danger whatsoever. And we bought the $15 calls. Oh, that's good. Those are half in the money. And we sold the 25 calls. And we have 20 months to go to make another $5. So far, we are winning on all three legs. We're up 2,200, 2,600, 3,400, 4,400, about $4,500. And we started with 11 minus 5 minus 4 is 9. So we started with $2,000. So we're up about 200-something% so far. And we got 2 years to go to make, well, let's see, how much is the total now? The total now is 13 minus 7 is 6. So it's 6,000 now, and it should pay 20,000. So, it's funny because it's still a good trade because it's net 6,000 now, and if it all goes well, it's going to be $20,000. Well, we've started off at net $2,000. So we're going to have a 10-bagger on this trade, and if you go now and you make 14 out of 6, you're only going to make 200%. So it's still playable, but I always have that trouble. Like for me, it's like I always feel bad. Like people ask, "This is a good trade." I'm like, well, yeah, it's a good trade, but we made so much money already. I feel like I'm selling you something after we already took all the profit. It's like we already made so much money on this thing. It's a weird thing. Some of these trades just make such ridiculous amounts of money when we hit them right. That even if I say, like again, I'm fully confident it's going to make another 200% from here. But would I take it? No, I already have a 1,000% trade. So why would I put more money in and only get 200? I have a CMG bull call spread that's $77 out of a possible 110. We cashed ours. Yeah, we for us it was such a big trade in the long-term portfolio. We cashed it. I didn't like the way the market was so high, and ahead of earnings, I was like, well, anything could happen. How'd they end up today? Just on the off chance that that something bad. Oh, they only up $15. So like last week when we did our portfolio changes, we took them out of the long-term portfolio because it was like $110,000 or something. It was like some huge amount of money. And I was like, I just can't risk. I can't see leaving $110,000 open. So we dropped it onto our cash pile. We now have over $1 million in cash. And we left the short puts though. We did. Where are they? Oh, they'd be way up here. There they are. So we only had 5 short puts. We have the 400 puts, and obviously they're $100 in the money almost. And they were $48 when we sold them. We sold these for $24,000, and we're going to make our 100%. They're up 73%. Now here, they're up the same 70% the position was, but here it's like I really am not worried about paying $400 for CMG, and our net would be $350 anyway. So the worst case scenario is we end up owning CMG at $350. I don't have a problem with that, especially because we just cashed out enough money to pay for the position. So that's how we did it. We cashed out the bull call spread just because to risk 100 and something thousand to make 30,000 more when I know we'll find something better to do with $100,000, it just wasn't worth it. And again, because we cashed that out, it lessened. We didn't have a need to add any more puts. Like I didn't want to keep throwing money at the short-term portfolio because it's been losing constantly money. As the short-term portfolio was up 500% at one point. Now it's up 400%. I didn't want to throw more money in the short-term portfolio at hedges because they're totally not working. So in a runaway bull market, I didn't want to start making more and more hedges. So instead of that, I wanted to cash out. So we cashed out about a dozen positions in the long-term portfolio so that way we have less of a need to hedge. So the hedges that we do have in the short-term portfolio are adequate, and we don't have to put more money into it. right? So because either we're going to protect the long-term portfolio by putting more money in the short-term portfolio into hedges, or we're going to cash the long-term portfolio. So now what we have in the short-term portfolio is plenty. Oh, ARR. Speaking of things we should have done, we never sold puts and calls on ARR. Somebody remind me to do that. We have to cover them. I missed that one when we reviewed. But anyway, 77 out of 110. I would cash it, and I think you can do better than that. I think 374.80. No, you're not. Oh no. We had a better spread than you did. Our spread was like $130 or something. I forget. We had a bigger spread. That's why we had more money. So no, 77 out of 110. Honestly, you could. Oh, for 218. No, I would take the money. I would. Just you'll find something else to play. What's the play on FTR? Well, in the long-term portfolio, we don't have it in the long-term portfolio. How weird. Seriously? I find that hard to believe. No, there it is. Okay. Oh, because we bought back the call. That's why. So in the long-term portfolio, we have the stock, of course, which we paid $4.65 for. Big loss. And we sold the $4 puts. Well, I wouldn't do that as a new trade. So I guess the real question should be, what would you do as a new trade for Frontier? Ooh, okay, running late. I gotta go. Frontier. Obviously, buy the stock because you want the dividend. Buy the stock for $193. You can sell these $2 puts for 70 cents. That's crazy. So if you get 70 cents for these, that's great. 65. I wouldn't. 60. I'd tell them to shove it. I'd want at least 65. So you can sell the $2 puts. That's net 140. If you sell it for 65, that's net 135. So obviously cheaper if you have to double down. And then sell. What I said, the 150 calls. If I sell the 150 calls for that, yeah, I guess so. I would sell the 150 calls because I don't know when it's going to turn around. And honestly, it's like you just want to be in it for the dividend. If it does turn around, you'll have that short call problem we have with Win, and you should be happy. So that's the amount that if it does turn around and it starts moving up, that when it goes over $2, you're going to be very happy to double down on your stock. Okay? Obviously, the short puts will be far in the money. If it goes past 2, then the short puts are looking safe. These guys would be in the money, and you're probably going to get pulled away. Then you buy another 2,000, and you roll the short $1.50 calls, which are 60 cents now. You could roll them up to like the $3 calls, and then you'd have a $1 spread. You understand? So you start out with a reasonable amount, and your plan is if it goes down, obviously you'll be assigned, and you'll have twice as much at a lower price. That's easy. If it goes up significantly, you buy more stock, and let's say 225, you buy more stock, right? By the time it's 225, now your average is like 210. But because you have twice as many now, you can split the $1.50 calls to 2 times the $3 calls. And now, so instead of having, instead of having your stock at 193, you're going to get called away at 2. You'll have the stock at 215. You'll be called away at 3. All right. Hopefully that wasn't too complicated. But that's the point in options. You always have to know what you're going to do. What am I going to do if it goes up? What am I going to do if it goes down? What am I going to do if it goes flat? And if you are comfortable with all 3 of those scenarios, that's a good trade. If you're not, you probably shouldn't even make the trade. You have to be comfortable with any situation because any situation will happen. When you got 20-something positions out there in your portfolios, believe me, any situation almost every month, something's going to happen. And no matter what it is, it'll be look, it's Win going too far up, it's Frontier going too far down. Anything is going to happen, and it can happen at the same time. You have to be prepared to deal with it. We're super prepared because we have $1 million cash, in our long-term portfolio. We have $1 million. We only have 200. Now of course these are leveraged, but we have $285,000 worth of money in our positions. We have $1 million in cash. we are ready to double down all of these positions twice if we have to. We don't want to, but if we have to. So there's not a single position here that we wouldn't happily double down. And frankly, I'd rather double down on these and add more. I've got 26 spreads. That's just a spread. We have 26 spreads. We have 7 dividend plays. We have 4 bull call spreads. So we have 30 spreads basically. We have this is another dividend play. So that's like 8 dividend plays. So that's 38 dividend plays and spreads. And then we've got 22 short puts, and that's after we just purged a whole bunch. We still have 22 short puts. So no, I don't want new positions. I'm really not looking for more things to add to the long-term portfolio, so I can spend 2 weeks writing reviews every month. and as long as it's making money the way it's making money, I'm not going to complain. 138, Jesus Christ! Look at this. I mean, we just did the review. April portfolio. Okay, so this is the 9th. I'm not sure when exactly we put up the long-term portfolio, but let's just say April 9th, we were at, oh good, I didn't write down the number. Gotta find it now. Are you the long-term portfolio? Yes, you are. That's part 1, part 2. I mean, do you know how much work this is? Jeez. Look at that, 159. So we were less than 1.3 million, not even not even 3 weeks ago, and this little rally has taken us from 1297 to 1388. We're up like $90,000. I mean, that's leverage, right? $285,000 worth of positions is up $90,000 in 3 weeks. That's nuts. But again, that's nice though. That's why we like to have all the cash on the side. We can make plenty of money, ridiculous amounts of money we can make doing it this way and being safe. And if the market completely collapses tomorrow, we're going to be excited to double down on pretty much every single one of these positions. And we've got plenty of cash to do it. We can sleep like babies, and we can not worry about this one going this way and this one going that way. Who cares? We'll fix it. Money fixes lots of problems. Ask any rich person. Money fixes most things. It can't buy you happiness, but it can sure sweep a lot of crap under the rug. Like Apple. Look at Apple. It's disappointing because we're down 49,000 on the short call. We'll fix it eventually. I'm not excited to put another 185,000 into Apple to double it down. Well, it wouldn't be that much, but on net, whatever the net would be. But if we have to, we'll fix it. But right now, let's just watch and see what happens to earnings. Then we'll decide what we want to do with the trade. But meanwhile, it's not like we're losing money. We're just only up $30,000, which is disappointing because I'd rather not be down the 49. But in the grand scheme of things, it's all about the balance, and the balance is making this insane $90,000 in 3 weeks. Even if we have the whole $1.3 million in play, making $90,000 in 3 weeks is a crazy amount of money. But that's because this portfolio is essentially 100% bullish. And this market is 100% bullish. And this is where we put the bulk of our money, in long-term, good value stocks. That's what it's the principle for 3 years. That's all we've been doing. Buy a long-term value stock, stick with it, don't mess around, don't keep adjusting it, stick with the plan, sell the premium, collect the premium, make money. It's not hard. It's not, if you're into the trading every day and changing this and changing that, it's hard to get used to. It's very hard to sit there and watch and say, oh, shouldn't I do this? Or can we sell this? Or can we move that? Or can just if you just let it happen, if you just step back and let it work, you will find out you can live a much happier life, make more money, and have more time for yourself playing it like this. And this is what Warren Buffett does. He buys a stock and he leaves it alone. And he comes back, and 10 years later, he goes, look, that was a good one. And then 10 years later, sometimes he goes, look at that, they didn't make money. And he either buys more stock or he cuts it. Two possibilities. And he's done that for 60 years, and he's the richest man on earth. Well, pretty much the richest man on earth. And that's what I'm trying to teach you guys to be. But the problem is there's no fast way to do it, and you're not going to get fast results. I wrote an article called Getting Rich Slowly. That's what this is, getting rich slowly. But we outperform almost everybody else on the market. Oh, and in the second half of the year, we're going to start a hedge fund. So we'll be able to actually start proving this out with a track record. So I'm very excited about that. That'll be fun. All right, so what else? Ford earnings tomorrow, giving you a response to my earlier question. Seems like you're not worried about them. I'm not worried about Ford's earnings. I mean, look, all the auto companies seem to be a little bit disappointing, but that's why I want the conservative position on the stock, and I've got no worries about that. If they get cheaper, I'm happy to have them. Again, people don't understand cyclical businesses. Nobody wants to play a cyclical company anymore. Cyclical companies, they make money for a few years, then they don't make money for a few years, then they make money for a few years, and that's why the PEs are so low. Because your PE of 8 represents the average of 3 good years and 3 bad years. That's why you have a PE of 8 or 10 on some of these cyclical companies, because they don't always make that kind of money, and people know that. It's like, sure, this is a good year, but wait till we have a bad year. The thing is, nobody actually holds the stock anymore, so people only want to be in the good years, and then they dump it in the bad years, which gives you incredible, and this is what we do all the time, gives you incredible opportunities in the down cycles. So when I go into Ford, I want to own that Ford for $9. I want it to be assigned to me. I want the $10 puts to be put to me, and I want to have a $9.25 net entry on Ford for for double the amount of shares. Maybe I won't get it, and if I don't get it, my consolation prize is I make the money on the other side. I make the 35%. So to me, I have the opposite attitude. See, that's why I get confused when I'm trying to explain. To me, the worst case scenario is I make 35%. The best case scenario is I buy twice as much, and Ford is down below $10, and I'm making zero. But I have a ton of Ford cheaply. That's the better case scenario for me because I want to own it for 20 years. My time frame is to buy the stock and give it to my children. That's my time frame. And generally, and by the way, as a quick summary of what we do here, with the long-term portfolio, our job is to whittle down the basis of the position. So we want all the positions to end up with a cost basis of 0. So you collect your dividends, you collect your option premium, the basis gets lower and lower and lower, and within sometime between 5 and 10 years, hopefully your basis goes to 0. Once your basis is 0 on a dividend stock, then I can hand it to my kids. They put it in their bank, and they put it in their portfolio. It just stays the rest of their life. And every quarter they get a check. And it doesn't matter whether the stock does well or does poorly, as long as it keeps paying a dividend, they get a check. And when they are older, and they look at the bank account and they look at the thing, if the stock does well, if Ford is still in business and you're buying Ford flying cars in 40 years from now, and my kids are ready to retire, well, not ready to retire, they'll be 50, but whatever, you know what I mean. So my kids get to retirement, and Ford is a flying Ford car company, and everybody's flying around in Ford, hovercrafters or whatever the hell they have, and the stock's gone up 5 times in value. Aside from getting the dividend, their monthly check, they'll say, "Oh my God, I get this monthly check. I never looked at the stock. The stock's worth $1 million. That $20,000, $100,000 worth of Ford my dad gave me, 40 years ago is now $1 million, and hopefully $1 million will be worth something at that point." But that's the nice thing about stocks; they tend to move with the inflation, so they'll keep the value. But that's all we want to do. We want to just buy these stocks, collect the money, let them pay for themselves. Once they're paid off, we buy another stock, then we buy another stock. We've been doing this for 3 years. The whole purpose of me running this long-term portfolio for 3 years is to teach people how to build it over time. Because we used to always kill the portfolios when we made 100%. Our goal was always to make 100%, and then we cash out and start again. But people were not getting the message that I'm talking about today, which is long-term investing strategies. And the only way I can really do that is I want to demonstrate how this portfolio will be up It's up 175 now. Next year it'll be up 200 and something. The year after that it'll be up 300%. Then it'll be up 400%, then 500%. I want people to be able to see over the course of 5 years, 10 years, how this portfolio grows so that they can understand that you can get in at any time with the new positions that we take and start on the same path. And we have a 3-year history. You can go back and read it now and see every single trade we did in our portfolio reviews and look at the way they progressed over time and look at the comments that are made where people say, oh my God, I'm scared of this and I'm worried about that and this and that. And you see how it works out over time because you stick to the program. All right, so that's my commercial. But it's really worth it to go back and look at some of these things to get an idea of where we used to be. Please write the FTR basics in chat has to leave. What? All right, anyway, the FTR bull call spread in chat has to leave. All right, so ask me in chat. I'll get back to you. Speaking of chat, it's 3:15. Got to kill this thing. All right, guys, thank you all for coming. We will do it again next week, and have a lovely, lovely rest of your week. Take care.